Afternoon, everybody. How is everyone doing? I think we've got about 21 people in so far. We'll wait for a couple more people to trickle in. But in the meantime, I'll give a bit of a introduction to myself. My name is Ben, and I head up the R&D team over at SeedLegals. I'll hand over to Dave to introduce himself.
Hi everyone, so my name's David. I'm one of the senior fund managers here at Swoop, just helping businesses essentially raise funding via unsecured debt.
Fantastic, thank you for that, Dave. Excellent. So it looks like we've got quite a few people trickling in. I'm not sure if people can ask questions throughout, but I think what we'll try and do is keep any questions. We've got a bit of a Q&A session at the end of this webinar. If we can hold some questions for them. We've also got a few questions that we had before the webinar that I'll do back to as well. But yeah, any questions at the end, if you want to pop them into the chat as we go along, anything that comes into your head, then we can address that in the Q&A session towards the end of the presentation. But I think waited for about 4 minutes, or we think we can probably crack on. If you'd like to share your screen, David.
Perfect. Can you see the slides? If I just go back to the. Oh. Apologies. There we go.
Fantastic. Excellent. Okay. So, as I said, right, what we'll do is I'll give a bit of a background of R&D, specifically R&D tax relief for companies, and go through a bit of a definition, maybe some of the qualifying criteria, and hopefully take up a few of maybe some of the questions you have in your mind. And then what I'll do is I'll hand over to David at the end, and he can talk through some of what Swoop offers in order to, I suppose, bring forward R&D funding. Fab. So if you could have the first slide, please, Dave. Still on the intro slide. There we go. Excellent. So what is R&D tax relief? It's essentially a government incentive to boost GDP spend on research and development. The clue is very much in the title. It's specifically only for companies who are registered in the UK and who are liable to UK corporation tax. So it's actually one of the questions that came in prior to the webinar, but you don't need to be tax paying so much as actually just to be registered for corporation tax. So unfortunately, it's not the kind of relief that will apply if you're a sole trader, or if you're not a company registered for corporation tax. If, for example, you're a dormant company or for some reason not trading. And a really important point with R&D is that actually there are no restrictions on what industries can apply. There are some restrictions on what kinds of activities qualify, but what I'll do, I'll come on to that a little bit in a couple of slides' time. Fab. So there are two schemes, or two R&D schemes. For the purposes of this webinar, essentially we're going to try and focus on the first scheme, which is the SME scheme. This is the more beneficial scheme. It gives you up to 33 pence back for every £1 you spend on qualifying R&D. Briefly, the thresholds for the SME scheme are a headcount of under 500, a turnover of less than 100 million euros, and a balance sheet total of less than 86 million euros. It is in euros. It is a definition that was written by the EU Commission. So unfortunately, it's a bit of a legacy left over from pre-Brexit times. So we're stuck with euros until they change the definitions. The Ardex scheme is slightly less beneficial. It'll give you around about 10.5 pence, 11 pence back for every £1 that you spend. It is relevant if you have received grant funding. And again, I'll come on to that in a the slide in a second. Excellent. So, big question here: do I qualify for R&D tax relief? Essentially, there are two criteria which need to be satisfied in order to qualify for R&D. The first being that you are seeking an advance, or a project that you are undertaking sought to achieve an advance in a field of science or technology. Again, it's quite grandiose, and that is quite a broad, ambiguous definition. Essentially, what it means is that in a specific field of science or technology, you are either creating something new, appreciably improve something that existed already, or sought to create new knowledge or capability above and beyond what existed before in that field. One really important point here is that actually it's really important to note that there's no success requirement for R&D. So even if the proposed outcome of your project was unsuccessful, or the project failed, or you scrapped the project because it just didn't work, it wasn't commercially viable, then you can still include the time, money, and effort spent in trying to seek that advance. So yeah, failure is actually quite a good point for R&D. It proves that things weren't straightforward. So the second criteria for R&D qualification is that in seeking the advance or improvement that we just spoke about in the last slide, that you encountered scientific or technological uncertainty. Again, this sounds quite grandiose, but what this really means is that it wasn't straightforward to achieve your end solution project goals, and that you had to engage in I suppose, a process of iterative development, testing to get to your end solution. Often we see one of the main challenges for this is that actually we were trying to do something that the information wasn't available in the public domain on how to achieve our solution. This might be because it's actually a solution that's already been done, but actually it's been undertaken by a competitor, and that solution, that advance, remains the proprietary IP of that competitor. So they're not going to share how they got to their end solution, and you, in developing a comparable solution or duplicating the same effect, but with lots of different process, a different mechanism of getting there, the time and effort spent in actually that process of getting to that point, that might be included in an R&D claim, is definitely one of those uncertainty elements that we're trying to hit as well. So how does R&D differ from typical funding routes? At SeedLegals, we have quite a lot of different types of traditional funding routes and different offerings relating to funding. We do lots of different services that can help startups and early stage businesses raise money and raise capital, essentially, to keep their businesses going and to scale and grow their businesses as well. R&D is kind of one of those things that it doesn't replace a funding route. It's actually something that we should consider as being used simultaneously as your funding route. So the SME scheme in particular, it acts a little bit like a state aid. It is technically notified state aid for tax purposes, and actually works in a very similar way to what traditional grant funding, for example, an Innovate UK grant, it works in a very similar way, similar processes as that grant. For example, there are technological eligibility criteria you need to fulfill, and funding is typically given on a project by project basis, which is fairly similar to the R&D scheme as well. Because of this, if you are in receipt of a state aid grant such as Innovate UK, you can't claim SME R&D tax relief for the same project. HMRC essentially say that would be double dipping. You'd be claiming two forms of state aid on the same project. However, what you can do, you can't make a claim under the SME R&D scheme, but you can make a claim under the second, slightly less beneficial Ardex scheme. So there is rationale for being able to actually make an SME scheme and an Ardex scheme in the same application in the same period. That's if you've got two projects, one of them is grant funded, one of them isn't grant funded. If we can, I suppose, ring fence the finance, what we can do is we can make known as a hybrid claim, and you can actually claim R&D tax relief and an RDAC large scheme R&D claim as well. So this is quite an important one. An R&D claim can be made every single year, which is not always the case with traditional fundraising routes. It's a retrospective relief. So when we're making an R&D claim, it's made at the end of a financial period. So when you're doing your accounts or your financial statements, when you're preparing those at the end of your financial year, that's when you start looking at your R&D claim. That's not to say that you can't look at your R&D claim during the year. Actually, if you front load a lot of the work and actually capture the information contemporaneously, so as you're doing the qualifying activities and you're capturing that information, then it's actually a lot easier to build that claim when you come to the year end and to submitting your tax return. As I've just mentioned, actually, the claim is submitted in your corporation tax computation and return. So the financial information will go into that. And you'd also submit a report, a technical report or a technical narrative alongside your corporation tax return, which has your R&D numbers in it. This report essentially is a summary of all of the work that you've done during that period that qualifies for R&D relief, which you are claiming R&D relief as well. So it's quite an important document. Strangely enough, there's no actual requirement to submit a supporting R&D document with your corporation tax return. You can just put the number in your corporation tax return if that's what you want to do. We do find in our experience that actually it is something that does mitigate the risk of a HMRC inquiry. HMRC can always inquire, that is their right, but we do find that actually if you do provide a substantive report, goes alongside the application, that it does help to quell any worries that they may have and mitigate that inquiry. Fab. So the next couple of slides, I'd like to explain how R&D can benefit your company, depending on your starting profit or loss position. Firstly, loss-making companies. So if you're making a loss, you can still claim R&D, and actually it can be particularly advantageous if your losses are quite large. It's a great way to bring much needed cash flow in the form of a cash credit into your business. And as I've said, typically heavier loss-making companies can benefit more from the R&D scheme. As you can see, it's up to 33% of your R&D spend if you are a heavy loss-making company. And we'll go on next to talk about if you're a profit-making company. It's a little less beneficial, but still quite beneficial if you're an SME. So when you start making a profit, that's probably a good way to put it. There are a couple of mechanisms that you can essentially use to, I suppose, use your R&D relief. Essentially, the first thing you'll do is to offset any profits, any trading profits you have in the period with the R&D claim. So actually what this means is that if you've yet to pay your tax bill, it can reduce your tax liability. This is corporation tax liability. Or if you've already paid your corporation tax bill, then you might get a refund back for the overpaid tax that you paid. What you can also do, if you've already offset all of your corporation tax and you've got some R&D amount remaining, you can then enhance your trading loss, and do is either surrender this for a cash credit, or you can roll it forward into future years to offset against future profits. So it is quite flexible in the way that you can use it, particularly if you're a profit-making company. Typically, the overall relief is around about 24p in the pound if you're a profit-making company. And one final note on this slide that I probably forgot to mention is that claims can be made to 2 years after the end of an accounting period. So let's say you submitted a claim in December 2020. Your accounts ended 2020, and in that 2020 period, you undertook some qualifying R&D activity and have qualifying R&D spend. Then that's not lost. We can go back. We have up until December this year to look back at that 2020 period and make a claim, an R&D claim based on the expenditure and the activity during. Excellent. This, yeah, really important slide. So R&D is key for businesses. business survival during COVID, bringing in much needed cash flow, reducing tax burdens on smaller profit-making companies, unlocking growth. I mean, where we found it was particularly useful was where companies had quite high burdens in terms of their rent and their rates. What we're finding is they had office space and physical spaces that they still were paying rent on and paying rates on these places that they couldn't actually recoup. And it was found that actually the R&D scheme being there kind of brought that cash flow in to be able to kind of keep maintaining these physical properties, particularly where they were needed. But generally, I think it is quite a good relief, and we did see a lot of uptake during COVID for R&D. And in the upcoming recession as well, unlocking cash to pay staff and invest in innovation, that's a very important one, particularly for early stage businesses as well. I mean, I think the average claim size, I think for us, is about £42,000. That can be, that could be somebody's wage for a year. That might be 2 junior staff for a year. That's, it's quite a big sum. And if you think actually you can transpose that into what you're likely to be able to use it for, and there's no restriction on what you use the cash for, you can literally use it for anything in the business. Yeah, the intention is that it's supposed to be invested back into your innovation, back into your R&D work. Essentially, I mean, if you're hiring staff, that's generally what you're going to be doing. You're going to be hiring staff hopefully to continue helping the business to thrive and to keep doing that work that actually makes you qualify for R&D in the first. Excellent. Another couple of points here. So if your R&D activities in the current year will be reduced, as you said, the R&D claim can be made for 2 prior periods as well. And it's actually always quite a good thing to demonstrate to investors that you're being financially and tax savvy. And we've got a lot of VCs and investors that we work with at SeedLegals who, one of the first things that they often ask is, has the company looked at their tax? Have they got a good accountant? Have they looked at R&D? Have they looked at capital allowances? Are they getting all of the reliefs and incentives that are due to them that they should be claiming? One point on this as well, I did this recently, and someone also mentioned quite a good thing with R&D at the moment is that one of the qualifying cost categories is utilities or consumable spend. So you can, if you've got a physical premises where you're employing staff and they're undertaking qualifying activities, then you can include a proportion of your utilities, so gas, electricity, water payments in that R&D claim, which, if we think about the current state of energy, is actually quite a beneficial thing, and might even be in the next couple of years a cost category we see increase year on year. That leads me nicely into the next portion of this. So what costs can we include in an R&D claim? This is quite restrictive for R&D tax purposes. So there are essentially 5 primary cost categories. And your costs and your claim should fall neatly into one of these cost categories. If it doesn't, it's quite difficult to be able to, I suppose, justify that spend. The first one here, so we've got staffing costs, which is essentially your traditional payroll costs. The employee being sat on your payroll, you pay them through payroll, and they're subject to PAYE and NBC. This is typically the bulk of most payments R&D claim. It's staff time, and a lot of questions get on this are typically, how do I quantify my staff time into my R&D claim? And actually, for small SMEs, it doesn't need to be, you don't need to be using timesheets, you don't need to be capturing information to the minute, to the hour. HMRC understand that actually with a small company, they don't have those kind of systems in place. So what you can do is you can apply a reasonable apportionment or percentage to that person's time for the year, and take a percentage of their salary, do that in the claim. So, for example, if an employee was working 3 days a week on R&D, what we would say is that would roughly translate to about 60% of their overall time in the year on R&D activity. HMRC are more than happy with that kind of approach. And that's the same with the other costs as we go through them now, that you can use a reasonable apportionment to include them in the claim. Another large cost category, I'd say the top two here. So we've got staffing and we've got subcontractor costs. And this is where you outsource part of your R&D claim to a third party. It might be a development house, it might be a manufacturer, it might be a designer, whoever it might be, that you're essentially giving them part of your R&D as work to do. A note here that pure consultancy costs, so where you bring somebody in to essentially give you a bit of a lowdown on, what happens in this industry. So that very much a pure idea of what a consultancy cost would be. Those kind of costs are not eligible. We have to demonstrate that actually there's some kind of development work that's been undertaken. So if you're giving a bit of your, for example, you need to get some custom tooling built and you send that out to somebody who's a specialist in that field. They then do that, bring it back, charge you a fixed price. Yeah, amazing. That would probably be a subcontractor payment you would be able to include in the R&D claim. A note on subcontractor payments is that they're restricted to 65% of their total value. This is to account for any kind of perceived benefit that you're getting from the subcontractor. The next category that I've already alluded to is the consumables. And this is generally, typically supposed to be for things like raw materials. So anything where you have a good example is lab materials or lab reagents. So if you've got a laboratory that you have done lots of work in and you're using different kinds of chemicals to get to a specific endpoint, then the amount of lab chemicals that you use, a proportion of those can be included in your R&D claim as a kind of consumable cost, because they've been, as per the definition, either used or transformed during the R&D process. It can be quite a generous cost. And in this category as well, we have utilities which are being used or transformed during the R&D process. So that includes things like water, electricity, gas, fuel, anything that you would be using in the R&D process. The next cost here is something we don't see too much in smaller company claims, but we do see in larger claims, particularly if there are group companies or perhaps larger development companies who are using agencies. This cost is called an externally provided worker cost, which is very niche and specific to R&D tax as a definition. And the easiest way to think about it is an agency worker, or somebody who you're paying to come in and to supplement your workforce. So they work under you as if they were on payroll, but they aren't on payroll. They're paid through a third party, for example, an agency. Similar to subcontractor costs, these are capped 65% of their total value because there is a perceived benefit. You don't have to pay the PAYE, etc., for this individual. And final one here is software costs. You see a lot of these in our claims, and it's software used during the R&D projects, such as GitHub if you're a developer, or things like CAD and CAM if you're in the manufacturing engineering space. If you've got software that is also being used by the non-R&D part of your workforce, then you can make an apportionment of this. And again, we're going back to that reasonable percentage, reasonable apportionment of time spent using this. So if perhaps 50% of your staff are working on R&D and 50% demand, you could say 50% of that software cost is going to be due to the R&D process. Excellent. Probably a good point to mention things that you can't claim in your R&D claim. Rent and rates. These are two things we can't claim for. We can claim for utilities, but not rental rates, which is quite unfortunate considering how expensive these things are. At the moment, you can't claim for cloud computing costs. However, the legislation is changing, and in April 2023, or claims beginning on or after April 1st, 2023, you will be able to include a proportion of your cloud computing costs. Now, this will include any development environment, such as Amazon Web Services, AWS, anything where you've used as a development platform or as a hosting platform, or storage as well. So it doesn't discriminate. It's pretty much any cloud cost that you use during your R&D can be included in your R&D claim. You can't include any costs relating to capital equipment, purchase of capital equipment. This is typically dealt with in your capital allowance claim. If it does relate to an R&D cost, there is an R&D allowance, which is a type of capital allowance, but that probably falls outside of the scope of this webinar today. Something that a lot of people find annoying is that can't include your legal or accounting costs. It is quite a chunky cost today, but legal and accounting activities are not eligible as per the R&D definition. And the last two there, they relate to the previous slide when we're talking about staff. And in early businesses, particularly in some of the startups we work with, a lot of the founders will be paying themselves either through dividends or through another means of funding. And if it doesn't go through the payroll, or you're not essentially subcontracting the cost out, then there's no real way that it's going to be like dividends is not an expense. It's a share of profit, so it's not eligible for inclusion in an R&D. However, if you're paying yourself a salary, even if it's a nominal salary through your company, then and you were involved in the R&D activity, then you can include that. A couple of rules on the costs. So the costs must be expensed to the P&L during the period. So there is a paid requirement, what's known as a paid requirement for R&D. You can't include any accrual values or anything that kind of sits outside of the financial period. It all has to sit within that year. If you've got costs that sit in the next financial period, then that's something that we dealt with the following year's R&D claim. And the same with the entities. If you've got a group structure and actually, we've got two companies here and they're subcontracting different parts of R&D to each other, actually the costs must sit in the entity making the claim. So if you're making a claim for R&D but actually haven't incurred any of the cost relating to the R&D, and actually that will sit with a sister company perhaps in another country or wherever, you really can't make a claim because it's a very much an expense-led activity. So it'll be very difficult to make an R&D claim on the back of expenses that you haven't incurred as a company. That there is a provision where costs can sit on the balance sheet, and there is a calculation that can be done with section 1308. We can essentially bring those costs back into the account for the R&D claim for the purposes of the R&D claim. But that's something that, if you do have a lot of capitalized expenditure, we can advise on that. Perhaps it again probably falls out of the scope of this, just a little bit before we talk days on that. Excellent. And this is a question we get all the time and something that we're trying to lobby to get a lot shorter. How long will it take the claim to be paid? Typical timeline or typical, I suppose the target time that HMRC set themselves is 28 days. This was recently increased to 40 days because of increased HMRC scrutiny. In practical terms, and it's probably the same Dave's side as well, we haven't really seen much of a reduction in this. It is still sitting around that kind of 40-day mark, and we are still seeing quite a lot of HMRC scrutiny in the market as well. I know advisors and friends who work in different parts of R&D who have seen a lot of pushback on some of their as well. This timeline can be a lot longer if you've got an Ardex claim as well. Ardex claims do tend to be a bit longer because HMRC think that larger companies can probably be a bit more self-sustaining, so don't prioritize them as much as they would necessarily. And I think that's everything from my side. I'll hand over to Dave to talk through the last slide here.
Hi everyone, thanks Ben. So as Ben mentioned, you can often wait, between 20, 28, 40 days. Sometimes it can be as long as 5-6 months, right, to receive your claim from the point where it's submitted, right? And that's where we've partnered up, SeedLegals and Swoop, in order to help SeedLegals clients advance that claim within 24 hours of submitting it. In fact, you can actually advance it prior to that submission. I'll go into some more detail on that. But okay, so in terms of the how does the process work? Who is eligible? How much can you claim, right? We'll go through eligibility first. So if you're submitting a successful R&D claim, there are two primary requirements that you need in order to be able to advance those funds. The first one would be that the claim needs to be of at least 50,000 So anywhere from 50,000, up to whatever amount you name it, that you can advance. But anything below that will be much more difficult to advance. And the second requirement is that you need to be loss making, right? If you're profit making, the advance will be kind of reimbursed as a tax credit as opposed to cash. And so therefore the lender needs, the applicant needs to be loss making in order to advance that tax credit on, within the 24-hour period. Now, in terms of how much can you advance, right? We've got lenders that will go up to 100% of the R&D claim, especially when there is a track record of previous claims having been made. The only thing to caveat that is that they will deduct other HMRC debt that you might have. So things like PAYE, VAT, that kind of thing. In terms of how the process works, right? Of course, you will have just, in most cases, you will have just submitted your case to your claim to HMRC. So you'll have your CT 600, your narrative, calculations, etc. That's exactly what we need for the R&D advance, right? Just so you're aware, look, the process that the lenders will take to underwrite your case and assess whether they can advance you is the exact same as HMRC will. And so their underwriters are all HMRC, and if you're approved by the lender, we've not had a case historically where the lenders approved it and HMRC has then challenged it. On top of the kind of HMRC, R&D claim documentation that you submit, the lenders will require you to number one, link your bank account, open banking. If your bank doesn't support it, they'll accept PDF bank statements, but if it does, they'll ask for you to do so. Only for the sake of helping, speed up the process and avoid any kind of, fraudulent activity or anything like that. The second thing will be to link your accountancy software. This will help the lender not only assess your current expenditure over the past kind of, 1 or 2 retrospective years, but also assess it moving forward if you wish to advance future claims as well. And then the last thing will be a quick KYC check, which is essentially uploading a picture of your driver's license or passport and taking a selfie. So, end to end on your end, it'll take, it can take 5 to 10 minutes if you have everything to hand. In terms of what security is required from a lender's perspective, right? We saw with the government schemes that personal guarantees weren't required, and now that we're coming out of those across the board, as I'm sure business owners will know, personal guarantees are required across the board. And if it's not personal guarantees, it may be a debenture, right? With R&D claims, because the lender is essentially taking security over the claim itself, no other security will be required. So that means no personal guarantees, no debenture, and no kind of no other security as such, no cross-company guarantees or anything. It'll be the claim and the claim only. And essentially, I wanted to talk through what are the benefits of doing so, because of course, you're advancing the claim, but it will come at a cost, right? Which I'll go into in a second. But when you're looking to raise funding, especially on the equity side, what this will do is essentially reduce the need for number one, or reduce your equity dilution, of course, but also it can add to your runway, and it can be, as Ben mentioned, it can be a good sign for an investor to see that you're on top of your tax relief schemes, and not only just that, but your runway, right? I know runway is a term that's commonly used on the equity fundraising space, and this essentially can help increase that, right? I know I mentioned earlier on the fact that there are 2 types of claim, two ways in which you can advance your R&D claim. One being at the point where you submitted it, and one being actually before that, right? So we now have lenders that if you have claimed previous R&D tax advances successfully, what they're able to do is similar to invoice finance, they link into your accountancy software and bank accounts. And they'll allow you to advance R&D as and when you spend throughout the year on a monthly basis. So, let's say you're claiming 100, for ease of numbers, you're claiming £120,000 a year. Each month, you'll of course, if it's done on a flat line, you'll be claiming 10,000, and you would essentially be able to advance that 10,000 as and when you spend it each month. Right. In terms of the costs, it'll range, right? It'll range on how long, depending on how long HMRC takes to pay you, depending on the the number of past claims that you've submitted, and the size of the claim and the size of the business, right? But essentially, as a rule of thumb, it'll range from 5 to 10% of the value of the claim. Lenders will often ask for a minimum of 3 month repayments, sometimes more, simply because of the point that Ben mentioned. The HMRC are taking longer to pay the funds. So some lenders ask for 4 months of interest to be covered, but then if HMRC pays sooner, they'll refund you that last month of interest. But essentially, that's it on the R&D funding side, right? It can be done within 24 to 48 hours. It's really essentially, it's in your hands to provide the CT600 documentation, link open banking, do the KYC check, and as I said, we've had cases in the past that have been funded within kind of 6-7 hours, so it can be done really quickly. And that's it on the funding side.
Excellent, thank you for that, David. Amazing. I think it's probably time just to answer a few of the questions. What I'll do is, if we go through some of the Q&A ones on this chat first, and then what we can do is we can go through some of the questions that were posed for the meeting as well. The first question here is, can you claim R&D on Innovate UK grants? As we mentioned during the webinar, actually, you can claim R&D on projects that have been funded by Innovate UK, however, not under the SME scheme. You can claim under the Ardex scheme, but which is slightly less beneficial, so about 10.5 to 11 pence in the pound back, rather than the SME scheme. That can be ring fenced to a project though. So if your Innovate UK grant, or if any other grant funding you get, state notified state aid, if you receive that for any single project, and you actually run simultaneous projects alongside that during a financial period, if you can ring fence that funding for which the project was funded by UK or any other grant provider, then you can include that in an Ardex claim and the rest in an SM claim. The next question here: will slides be made available? I think they will be made available. Yes. Let's look. Innovate one. So what's the difference? Why is there a difference between 33% and 24% between loss-making and profitable? Essentially, this is to do with how you're treating the R&D for tax purposes. So if you're making a loss, then essentially what you can do, you can take, because you're not taking the initial 100% deduction from any profits, HMRC allow you to take a kind of an enhanced or super deduction from using your R&D, so you multiply essentially by 230%. This is your kind of enhanced expenditure figure, and this essentially works out at around about 33% of its total value if you're a loss-making company, which is payable as a cash credit. If you're a profit-making company, then what you're doing is you're essentially you're just offsetting your corporation tax bill. So you're taking away all of the profit you get. So you're getting around about a 24% amount on that as well. So I hope that makes sense. It's quite difficult to do without I probably should have had a slide on working through some of the calculations there. Can we receive a recording today's session? Yeah, we can make a recording available. I think that should be getting sent out. Here's quite an important one. So if my customer pays for development, can I still claim this as my cost, or does my customer make any R&D claim? There have been a lot of legal tax cases surrounding this, particularly in terms of subsidy and who owns the R&D. There are indicators, specific indicators for who owns their R&D. So if you own the idea of the work being done, and you own the resulting IP of the project, that's one of the indicators that you do own it and make an R&D claim. There are other indicators such as autonomy. If you're autonomously doing the activity, and if you hold the financial risk burden of the project as well, those are all indicators of R&D ownership. But essentially, you will make the R&D claim where you own the R&D itself. So just owning the IP alone, it's not always a surefire, clean-cut way of ensuring R&D ownership and whether you're able to make an R&D claim. But again, it is very much on a case-by-case basis. So it's definitely something that I would urge you to get in touch with us about. So I run a small company. How much do you say the loan cost to get the claim back faster? I think this is a question for you, David.
Yeah, so the loan cost, there was two questions to that. First, how long? What is the loan cost to get the claim back faster? Normally, as I say, as a rule of thumb, 5 to 10% of the gross claim value, right? That can differ, as I mentioned, depending on a number of factors, but 5 to 10% would be a good rule of thumb. With regards to can you choose to advance your claim at any moment throughout your financial year? The short answer is yes, but if you've got a track record of previous successful claims that kind of advance can be based on. If this is your first claim, you would have to wait until you're ready to submit the claim.
Great. There's a question there that I accidentally missed. So, can you give an example of a consultancy business which has made a claim successfully, and what was the project? This is quite an interesting one. So we do get a lot of clients who work in spaces such as recruitment or HR or other types of consultancies that aren't traditionally technology or science facing. However, they conduct projects where we see most of it is in the software development space. So we worked with a client recently who was developing a new proprietary platform. I think it was a client matching client and client, I suppose, a candidate referral matching system, completely and utterly bespoke for their purposes, and actually required a lot of integrations with lots of disparate platforms, including their own system that had never really been done before. And actually they hired development teams and other companies to assist with this, and even brought some developers in-house as well. So there does have to be that kind of technology facing work when we're talking about R&D. There's not really much that can be done if you're not actively trying to create an advance in the field of a field of science or technology, and that can be software development, it can be manufacturing, it has to be a recognized field of science or technology. But typically where we see those kind of cases are in the software development space. That seems to be the easiest space for those kind of companies to fall into. Is there a minimum or maximum amount that can be claimed? I assume this is for the R&D side of things. There is no minimum. I think the maximum for the SME scheme is the de minimis, or the notified state aid maximum, which I think is 10 million euros. But I'll have to double check that one. But it's typically not a value you ever really get to. But there is no minimum. There used to be a minimum that they dispensed with. In regards to staff and subcontractor costs, instead of cash, we partly gave away shares in the business. Can I claim those costs? The answer is, I'm afraid, no. So it does have to, because going back to that paid requirement, the expense has to be sat on the P&L, and it has to be a kind of a cash amount for services received in its very kind of traditional sense. Do you see a lot of arrangements where shares or equity is given in exchange for services? Afraid it's just not something that can be brought into a claim, because essentially what you're doing is you're claiming a relief on the expenditure in your P&L. So the share agreement won't cut it, but it might be actually quite a commercial arrangement. So it's not necessarily a bad thing. It just might not be good for R&D. Do subcontractors have to be in the UK, or can overseas subcontractors be included? Good question. At the moment, yes, subcontractors can be overseas. The activities can occur anywhere in the world, and you can include them as long as they are paid by a company who is registered and is liable for corporation tax in the UK. That is fine. After 1st of April 2023, I'm afraid that is going to change, and you won't be able to include overseas subcontractors R&D in your R&D claim. This is a move by HMRC to encourage encourage innovation in the UK, and it is going to be one of the more restrictive changes to the R&D scheme coming in. There are some other changes as well, and we will be running some more webinars on what these changes are likely to be. If the business was dormant for the previous 2 years, but development costs were occurring, and this year we'll do a CC 600. Seeing the rest of that will be can we claim for all 3 years. So there you can go back to financial years, so essentially two calendar years back. The third year, if it's in scope, it might be there has to be a kind of recognized expense during that period. It has to have gone through the P&L. There is some rationale to include pre-trade expenditure, but there are some nuances around that. And again, I think that's probably a little bit topic for what we've been talking about today. But there has been rationale for that. We're working with a company at the moment who is transitioning from being a dormant company to being a trading company. And there are some things to consider during that time, mainly around registering. If one is the admin's lead and primary technical lead on Innovate UK projects, can we include our partners' R&D costs as subcontractors with a 65% cap, assuming that R&D was done to the benefit of the lead? Again, it would depend on the kind of activity itself. I would say that's something we'd probably want to take a look at. Again, it all has to be kind of part of the same project that you own, and the costs have to be borne by that company as well. It's definitely worth maybe checking that out, and please do reach out and maybe we can have a bit more of a one-on-one chat about whether that does work. Fab, I think that's everything from chat. We had a couple of questions prior to this, but I think they've mostly been answered during this. One of the questions was, can we claim back cash R&D if we haven't paid any tax to date? Yes, absolutely. As long as you were liable to corporation tax, so you were actively trading during those years and there was R&D activity, and there's expense relating to that R&D activity during the period as well. What documents are required to start a claim? So essentially when you're making your claim, as mentioned, you would submit it through your corporation tax return and your corporation tax computation. So when you're submitting a claim, you need to submit those, and any supporting information. Do recommend that companies provide a supporting technical report or technical narrative which outlines their R&D activities during a period and the spend as well, and submit that all together to HMRC. Those are essentially what you need to get started with an R&D claim. We've got another one here. No, I think that was it. Actually, I think we've covered all of the questions. I think that's everything. Everything from your side, David?
Nothing else to add. Just if you have any doubts, feel free to pick up the phone to any of ours. You'll have our emails, I'm sure, will be circulated around after the call, or pick up as I say, pick up the phone, register on Swoop. We'll make sure that if we can fund you an R&D grade. If not, we'll I'm sure we can find an alternative route.
Fantastic. Well, thank you very much, everyone, for attending today. Thank you to David as well for your information. And again, if you have any other questions, or if I didn't quite answer your question fully, then please do reach out, and maybe we can book in a bit of a session to chat through some things in some specifics as well. We'll make this recording available, and hopefully the slides as well. So thank you very much, and look forward to seeing you on the next webinar. Thanks, everyone.